Hello everyone, this is Ryan with Numbers Up Finance, and today I just want to do a quick technical analysis for natural gas, a follow-up video to last week. It's Monday, February 11th, 2019. Here we have the futures for natural gas pulled up on the charts, 10-year, one-day chart we have. We're going to be taking a look at what we got to follow up from last week, like I said. So last week we talked about approaching a 262 support level. And back then I called for, I actually decided to hold on my position. I didn't really want to go long on it at all because it was seeming that we were going to break this 260 support level. We had strong momentum pushing downwards. The bullish divergence wasn't ready to play out, and we ended up pushing to that incredibly strong 254, 252 technical support level, and we played right off of it. If you actually look back for the charts, we haven't cracked that level in quite a few years, so you can see just how many reactions we have off of this, so it's really not surprising that we played off of it and that we're looking for a reversal right now. So last night we had a gap in the futures, meaning that we didn't open today at the same price we closed at on Friday. This was very favorable for anybody that got in before close on Friday because you were able to take advantage of a significant, I believe it was 4% gap in the futures for a single leverage position. So there's a couple things going on. You could favor a short-term hold and then a potential to re-enter the short position because I believe in the long term, shorting this market is a very good opportunity. Or you could favor holding this position a little bit longer than the short term, a little bit more than a few days. So maybe for a couple weeks to come. We're going to break it down and see what is more favorable looking forward. So as I said, this bullish divergence begins to be playing out. Is it possible that it gets foiled and we actually send the prices back downward? Of course it is. But right now it appears that our momentum is making higher lows while our price is decreasing, so we can expect a potential reversal to come, especially to follow this gap in the futures we had. However, if we take a look at the last time we had a gap in the futures, we were playing off of, again, a super strong technical support level. Back then I actually called for a reversal coming, and it took a couple of days of consolidation, but then we followed with an actual larger gap in the futures. But that was quickly reversed into what was ultimately just a bigger shorting opportunity. So I have one target laid out initially here around the 286 level. And the reasoning for this target is because not only is 286 a pretty strong resistance point, you can go back and test the reactions at 286, 285 on natural gas. There's quite a few. But we have this downtrend line forming. And now obviously you can draw a trend line to connect any 2 points at random. So I don't really put much significance on this trend line yet, but should we approach that 286 level and start to halt, even if we get a red day after that and it appears that we're reversing, it might be time to pull out of the trade because the trend line might actually become confirmed and we could be setting our prices lower than 256 in the future. But that's a pretty steep trend line, and 286 is a target. It might be a little, it might not be good enough, and there's a couple reasons for that. The main one is this price divergence we have forming, and I can't overstate how important I can't understate how important this price divergence is because all we need to do is just go back in time and back test a couple of these similar divergences and see how they played out. So let's take a look back here. This was in 2015. We had a similar situation where our price was making lower lows, but at the same time our MACD indicator, our RSI indicator was making higher highs, and what followed was a significant bounce, but that didn't just last a couple days like we could see here. That lasted many weeks. And if you pull out of this trade let's say here, where you first thought the reversal was coming and where the long was over, you would miss out on so much profit. You'd actually have so many chances to re-enter the trade. Of course, nothing just goes straight up and down. That's not really how it works, but this divergence played out so nicely, and the amount of time it went up after the divergence was very significant. It wasn't just a few days. We followed with weeks of strong rallying from natural gas. Same situation played out back here. Well, actually, a different situation played out back here. In 2014, we had a price divergence, lower lows, momentum and RSI making higher highs, and all we saw was a quick little spike in price, followed by a much steeper fall to come, setting up this next divergence we had, which was a year later. So this is going in case for the argument to pull out of this trade much quicker. Of course, it's fully possible to make a divergence and to only go up for a couple of days after that. The divergence doesn't always have to play out. But you'll find more and more as you backtest this 10-year one-day chart that when you make a divergence this strong, you will see more upside in the future than you will see downside. And by that I mean the trade won't last just a couple days. It doesn't go straight up and down, of course. I mean, you can see it. It's a cyclical movement. But, maybe we'll see it go up for a couple days, and then we'll see it come down for a couple days. But then we're going to make a higher high, and then we'll come back down, and then we'll make another higher high, and, things of that nature. So when you have a divergence that's playing out this nicely, it's a couple that with the fact that we are at a support that is this strong, mind you. It hasn't been broken in years. It's been tested multiple times. And we're this overextended on the downside. I favor this bullish divergence to actually be a little bit more longer term. Now, I want to see how we look when we get to that 286 price target because, of course, it's circumstantial, and this can be a very news-driven market, and that matters. But let's get to that 286 target, and let's see if we melt through this trend line as if it's not there. If we push through this trend line as if it doesn't exist, then it's invalidated, and I'm completely fine with this trend line being invalidated because, like I said, it's only 2 points, it's pretty steep, and it doesn't favor any type of bullish case whatsoever. So if we get to 286 on the natural gas futures, we push right past that trend line as if it's not there. Expect the divergence to play out for a longer period of time, similar to these ones have played here. I know it's possible for it to only go up for a few days, but multiple times, or more times than not rather, when you see a divergence this strong, when the price is making lower lows, but both the MACD indicator and the RSI are making higher highs, or higher lows rather, which is exactly what's happening here. RSI is making higher lows, MACD is making higher lows, price has been making lower lows. When you have all these things hitting the checklist, you're set up super nicely. So let's watch to see how it plays with this trend line. Let's watch to see how it reacts to 286. And if we melt right through that position of it as if that line is completely invalid, then expect a rally for a bit. And, again, nothing goes straight up and down, so don't expect it to just shoot back up to the previous December highs we had. But maybe we could start testing some of these resistance levels. Maybe we can test 335 again. Maybe we can test, I don't know, even $3 itself. I would love to see that. That would be a significant profit if you're entering in now. So expect these to play out for the longer term, and let's see if we can push past that trend line. Now, I want to touch on some longer-term aspects of nat gas. So as some of you might know, this market is just incredibly oversupplied, and the projections for natural gas it's actually projected to become even more oversupplied in the future, which is kind of just funny to think about. But I don't want to say the market's doomed long term because that's just such a general statement that requires way more diving into. But here I have the monthly charts pulled up for nat gas. This is the 20-year 1-month chart. Each candlestick represents a month, and what you can see is if you look at these yellow trend lines forming, they're pretty straightforward, each of which has 3 reactions. And once a trend line gets 3 reactions, I find it pretty valid. Or actually, I consider it valid at that point. So 3 reactions on a downward moving resistance, downward moving support, and right now we're sitting right in the middle of it. So though I think we have a good opportunity to ride the lawns right now, thinking long term, thinking where this market is headed in its entirety, I think we're headed down. For the next coming years, towards 2020, end of 2019, mid 2020, we could be testing, in fact, breaking these lows we've had here because we've done it the past how many years? I mean, this was back in 2009. We made this first law on this trend line, and then 3 years later, we made the law on the trend line, and then another 4 years later, we made a low on a trend line. So what does that tell you? I mean, 4 to 5 years from this low, we might be undercutting that low again. So in the long term, I fully expect this market to go down. It's incredibly oversupplied. Again, I don't want to say there's no hope for it, but there really might not be much hope for a market that is this oversupplied. And when the trend lines play out this nicely, again, I would fully expect us to come test this point. Now, this is a super far time down the road, but should we come test this point and start to see some consolidation, you could be looking at a really nice rally for a few months and just ride the long positions on it. The same way you could ride the shorts for months right now. Because again, we're just trading between these 2 trade lines so nicely on the long term, and there's so much downside to this market in the long term. But again, we're looking for good swing trades, we're looking for good setups, and what we have right here is a phenomenal setup in nat gas that is playing out nicely just as I expected. Of course, is it possible for it to be foiled? Absolutely. But go back test those divergences, see how long they play out for. Should this trend line get melted at that 286 price point, that would be very nice to see. And if we push right past that, I expect some movement up for the next couple of weeks. Other than that, not much has changed with natural gas. We're just seeing a follow-up to an analysis we did last week. I'll keep everyone updated with my thoughts on it should the charts change. But other than that, This has been Ryan with Numbers Up Finance. Make sure to keep your numbers up and happy trading.